them, Shaina. Dr. Reddy's numbers flashing at the bottom of your screen, 130 crores versus expectation of 500 crores in terms of PAT. It's a big miss and it does deserve an explanation and a D-rating.
Well, it does definitely. We definitely need to know what exactly went wrong. The expectations were not very high, but I think this is lower than what the expectations were. I think probably like we saw last quarter, maybe we need to check out if there's further write-offs from Venezuela.
There are further write-offs. Yeah. They've given in the release that Venezuela has impacted the numbers. But apart from that, even the North American markets have been down 16. European markets are down 10. And India market, which was expected to grow 14-15%, was up about only 10-odd%. Do you think that's a bigger worry, the sales miss in the other regions?
Well, I think, yeah, the sales miss, more or less we were expecting flat type of overall revenues, which now there's a decline. I think it is a concern. There were some issues in terms of, the plants not meeting FDA requirements, because of which there was expected to be some sort of a slowdown. But I think this is worse than what was there. Definitely we need to know if there is some, it is a one-time thing or there is some sustained type of negative impact in terms of overall growth. Second half is expected to be better with hopefully the US FDA issues resolved. I think
but again, that's an assumption, right?
That's an assumption, and I think the rally that we saw from the 3,000 to 3,500 levels was basically also driven by the open offer that was there.
The buyback, you mean?
The buyback, sorry. Yeah, the buyback. So I think that now being behind us, we are seeing some correction. I would say that it will move in this band till we see a major rebound in terms of overall growth and numbers in the second half.
For something like a Dr. Reddy's, how we say that Axis Bank has done X, so maybe ICICI may do X plus 1 or something in and around that. That cannot be extrapolated for Dr. Reddy's versus a Lupin or versus a Sun Pharma, right?
No. I think in pharma, each and every of them is a separate company by itself. You have to look at it on an individual basis because, each of them have a different type of products that are to be launched or impacted by competition. And also now the US FDA issues that are being raised separate for each of those companies. So they are in different time frames for resolution of those issues. So I think to that extent they are very different, and but I do think that after the huge amount of negative price performance that we've seen, I would say relative to the index over the last 1 year for the large pharma, things seem to be stabilizing. So I wouldn't really go out and put a sell on Dr. Reddy at current levels, but yes, I think it can easily go down by another 200-300 type of rupees, which is about 10% from here on back of these negative numbers. We need to see the write-off from Venezuela. Last quarter it was 450 crores.
Even if there is a write-off, even if there is sales decline in US, the price itself, the recent run-up because of buyback itself tells you that it's slightly fairly valued or slightly higher.
In terms of valuation, I would say that the upside from here on, unless things improve, is expensive. It is expensive. Valuations are high. It's about say 17-18 times 2018 type of numbers. So it is not cheap. And near term it is still more expensive given the type of numbers it's reporting and losses write-off. But I think really speaking, as we've seen, as you mentioned, the banking sector, Axis numbers were disappointing. But in terms of downside, there is a limited downside for these stocks. So to that extent, I would say that these stocks have some sort of a bottom around current levels, maybe 100 for Dr. Reddy, 100, 200, 300 rupees lower. Axis, I think it's already bottoming out. So to that extent, these strong long-term performers facing short-term issues, the market sort of overlooks to some extent.
Right. How would you look at Axis Bank? Numbers were okay, commentary was okay, but the stock has done particularly well after the results.
Actually, you're being very kind. Numbers were really, unlike last quarter, where all of us went in with good expectations for the numbers for Axis, this quarter everyone went in with very negative and subdued type of expectations, and the bank really was, declared numbers in line with the negative expectations or poor expectations. So to that extent, it sort of had already factored in the bad news, and I think going forward, while issues on the non-performing assets, on the stressed assets continues, I think in terms of pure valuations, it's still around less than 2 times book. If you see FY18 is just about 1.7 times. So on pure valuations, if one is willing to wait it out for the next 6 months, and especially large investors, that is why we are seeing buying coming in. Largely the buying is coming in by FI investors. There is money that is coming in into India, and it is going into these type of companies. So to that extent, money is flowing into these stocks, and they are larger. They are willing to take the next 6 months to 1 year wait period and hang on to the stock with the expectation of getting about a 15% return in a year's time, which is not bad for a large stock.
Right. If you look at Axis Bank, do you think it's fairly valued when you compare it to something like a Yes Bank, something like a IndusInd, maybe HDFC, or it cannot be compared because of the consistency of numbers that some of these other companies have shown?
No, I think it is undervalued. If you look at it, if you look at Yes Bank, if you look at HDFC Bank, I'm not saying that they are not good buys. At the same time, if I was to pick on pure valuations, Axis Bank, even if you factor in on a net NPA basis, if you factor in the loan book, probably increase in stress assets, it still will not exceed 2.5, 2.6, 2.7 times 1 year forward. So to that extent, if you're comparing it with something that's valued around 5 times, then I think value basis, if you're holding it for a 2 to 3 year period, the delta in terms of price performance could be higher for an Axis. So if I was to choose between an Axis and a Yes Bank, I would select Axis as at today's point in time. HDFC Bank is a steady performer, so that's another kettle of fish altogether, which is a buy for any long-term investor at any price point.
Right. Can you also just tell us, what your view would be on, something like a Havells? They also declared numbers. Numbers were good, but because of the base effect, should one look at the base effect growth or just look at the growth of 16%?
No, I think Havells is starting to look interesting now. After the huge correction, it saw a huge correction in the last year on couple of issues, and after those issues were sorted and the company has restructured, Sylvania, it has got out of Sylvania, and this impact on the overall balance sheet has been pretty good. And now that we are seeing numbers come back again in terms of growth, so to that extent, I think Havells is a good entry into the consumer spend space that we are looking at for the domestic arena. So I think to that extent, it's now a more well-balanced company in terms of good quality balance sheet numbers and showing growth again. And valuations have now started to look a bit more attractive than they were, say, maybe a year and a half back or 2 years back, much more attractive. So to that extent, I think Havells is a stock that one can start looking at.
Right. I just wanted to highlight that Nifty is down about 45 points or now 47 odd points, 8,588 for the market. If I look at, a correction of about 55, 60 points, it's very rare. But let's pull up the mid-cap space. I think that's interesting because till now mid-cap space was not correcting. But I think today we are getting the first signs that there is a little bit of correction in the mid-cap space. China, what do you make? Small cap index was up 0.25%, mid-cap index was up about 1%, which is now flat, and Nifty Junior again absolutely flat. Do you think this is the first signs of correction or just profit booking?
I think it's profit booking. I don't think it's a major correction because the sentiment is still positive, and we are seeing good fund flows coming in now with, I think even with Fed and the European Union, I think there also, I think there's talk of further quantitative easing, and there's a lot of money around that is coming into emerging markets as of now. So there is there is definitely the sentiment is positive, and I think if we are able to, and we have seen a very strong up move. I mean, don't forget, in the last couple of days. So there is, I would say, it's a small correction in an up move, and as long as we don't break important levels of say 8,500, we could take it as a short-term slight bit of profit booking.
Right. As far as flows are concerned, very strong flows. You think that itself is sufficient for markets to move up?
I think that is one. Yes, I think strong flows will drive markets till they come in, till the flows are there. And the second one is, of course, the expectation of the reforms that are happening of some major reform, and if GST were to come in, I think the overall sentiment would really get a positive boost, and then we would start talking of a range of maybe 8,400 and 8,700, widen the range. So to that extent, I would say that the sentiment as of now is quite positive.
Right. As we are speaking, markets are further going down. But Shaina, if we just look at the markets and what's happened, you think FII flow is the key number? So any change of trend over there and you would start to worry?
Yeah, I agree, because I think the depth in the market is such that unless there is strong FI buying, there is while of course now, I mean, there you do have domestic institutional investors that do step in and buy, but I think we need good inflows coming in to support market, especially at these current valuations. All said and done, valuations at these levels are not cheap. We are moving into the slightly expensive zone. So for the buying to continue, and especially in the large cap stocks which actually drive the overall index, so to that extent I think we need FI money to come in, to continue to come in, and I think my expectation is that over the next couple of months it's likely to continue.
Shaina, safe to assume that first rally or first sort of this correction that we are seeing in the mid cap, say we see another 1%, 2%, 3% mid cap correction, and the left out feeling would start to come in, and that's why you would see buying?
Yes, I think there's going to be buying at every dip because the sentiment is overall positive, and we are of the view that if there are reforms that take place, we are likely to see higher levels.
Right. Sumit, what's your view on the Nifty? Today's correction, it makes it healthier?
See, hi Pankaj. Yes, we have seen some correction from higher levels in Nifty, but I still feel that we should wait for sell call in Nifty. I think we should wait for 8550, 8540 levels. If Nifty is able to break 8540 levels, then we can think of selling in Nifty. Till the time these levels are not taken away, I think present selling or present correction in Nifty should be used or taken as a buying opportunity. And on higher side, if now again Nifty is able to break 8640, 8650 levels in next day or two, then we can see a sharp upside rally in which Nifty can move up till 8750 or 8800 levels also. I think till that time 8540 levels are not taken away, these dips in Nifty should be used as buying opportunity.
Right. Sumit, what will be your view on REC, PFC? These names have done well. Today we are seeing a very, very marginal correction. Again, a buying opportunity?
Yes, Pankaj, absolutely. I think this correction in these stocks is a buying opportunity because the overall structure looks positive to me. Stock has given a very good upside rally in past couple of weeks. I think this correction should be used as buying opportunity. Specifically, if we talk of REC, it's quoting at around 214 levels, and from these levels we can see upside move till 225 to 30 levels. If by chance there is a small correction in prices till 210 levels, then that should be used as a buying opportunity with the stop loss to be placed at 200 rupees on lower side for the upside target of 230 to 40 levels in REC.
Right. Shaina, how would you look at REC, PFC? Is the rates declining the key positive?
Yeah, one is of course that rates declining would be positive. Two is with the government trying to improve the overall performance of both SCBs as well as the overall power sector. I think that is positive. And third, the positive is the valuations. Both are available at less than 1 time price to book, which make them decent bets.
Right, but their business model has changed quite a bit after Uday. The bonds that they used to get, or the loans that they were getting, they'll not get the rate that they were getting. Don't you think that is something we need to see, look, and that's why the valuations are below price to book?
See, I mean, it's two ways to look at it. I would, yes, definitely they're getting lower rates than what they would have got otherwise. But at the same time, if you look, it is at least they are getting some money on it. These were basically as good as non-performing assets for them. They were not really.
So you're saying that if you would have written them off, it's better off they get a little return.
I mean, yeah, you can say that. Basically the SEBs were not paying them at all. So at least now they're getting some return, which is I would not say ideal, but it's better than what it was earlier.
Right. Sumit, and Shaina were just discussing about Dr. Reddy's. Can you just look at on the charts and tell us which is the next level where you expect some support to come in?
See, Pankaj, I think overall most of the pharma stocks are done with the correction, and now from here on we will see a good rally next couple of months. As far as your question on Dr. Reddy's concerned, yes, we have seen a correction in Dr. Reddy from the levels of 3700 levels, and today the stock has given a sharp correction from the high of 3480-85 levels. We have seen a correction of almost 150-180 points from those levels. I think immediately it will find support at around 3300 levels. This was the breakout level once when Dr. Reddy started moving up. So I think a stock should hold somewhere near 3280, 3300 levels. Once when prices take support at around these levels and then again start the recovery, at that point in time we can initiate a long position. At present we should see where the stock takes a support. Overall I feel stock should hold these levels, and from here only we will see a recovery, and again we will see a good upside move in which stock can again move up till 3600 or 3700 levels. I think Dr. Reddy is a good buy at around 3280, 3300 levels.
Right, 3280. So you would still wait for a couple of percentage points correction?
Yes, I will still wait for next 1 or 2% correction, and then I will see, because see, if you see the charts of Dr. Reddy, there is a 200 DMA at around 3240, 3250 levels. So because of the volatility, there is a possibility that we might see levels of around 3250 also. So I would wait for 2 to 3% correction from present levels, and at lower levels I would again look for buying opportunity, and I will buy somewhere at around 3300 levels, or if there is a because of volatility there is a correction till 3250, then I would surely buy at around 3250 for the high side, for the upside target of 3600 and 3700 levels.
Right, Shaina, would you agree around the 3250, 3200 mark, even on a fundamental basis you start to see some value?
Absolutely. I think one needs to be a bit patient, of course. I think the second half will be much better than the first half, and once we have Venezuela write-offs finished, I think it should be a better, and plus stability in overall currencies. I think that should benefit Dr. Reddy's.
Right, just wanted to highlight Bajaj Finserv as well. They have declared numbers. 80% of its earnings comes in from Bajaj Finance, which was of course a stellar set of numbers, so no surprise that they have also gone ahead and beaten street estimates. Shaina, do you look at Bajaj Finance?
I think both of them are very decent long-term investors type of stocks, both Bajaj Finance and Bajaj Finserv. Of course, the numbers were very good. I think valuations are slightly on the higher side. It is about now almost 6 times book, price to book. So I do think that, a one-way rally cannot be seen the way we've seen in the last couple of months. But these are good long-term investing. At every decline, one can look to invest.
Right, but Bajaj Finance at least has seen a one-way rally, irrespective of any other NBFC.
Absolutely, yeah, it is. It's a one-way rally, but at the same time, I would prefer to. I mean, it's expensive. It's like 5, 6 times, 6 times.
It's always been expensive. When results came out today, also it was expensive.
Yeah, absolutely.
So you think the problem here is that there are no sellers?
I think that is one issue, and the liquidity in the stock is not sufficient really, and you have certain long-term investors. They are good dividend-paying stocks also. So even retail HNIs, these are some of their favorite type of stocks.
Right. How would you look at Ujjivan Finance and Equitas? They have also done pretty well.
Yeah, they're also very expensive actually. If you look at current levels, most of the NBFCs have become, in my view, pretty expensive. Why not just buy a HDFC bank?
Right, right. I'll just come back to you, Shaina. Sumit, any view on Bajaj Finance? As even Shaina mentioned, it's not a very frequently traded counter. So if you don't track the name, then then probably we can pass it away.
We do track the stock. Stock has given a very good upside move today, but now the problem is that stock has already given a very good upside rally, and recommending a fresh buy at these levels, it's not right, because the stock has given a move of almost 1,000 rupees from lower levels. I think anyone who is holding the positions from anyone who's taken position at lower levels, they can hold on their positions, because immediately I think the stock should face a psychological resistance of 10,000 mark, and from there on we will see whether the stock is headed upside or there will be some correction. But overall at present the stock structure is looking very good. Existing positions should be held on, and fresh positions should be avoided at these levels.
Shaina, Yes Bank will be declaring numbers tomorrow. I mean, any sort of expectations for Yes Bank, or do you believe it will continue to meet street estimates?
I think it will meet street expectations, and I do believe that they are doing pretty well, both on their growth in terms of book, as well as they are able to keep their non-performing assets in control. So I don't see any problem in the numbers, or I only see an issue with the valuation that the stock is getting as of now.
Right. Sumit, on charts, Yes Bank looking very strong.
Yes, absolutely. Pankaj, trading at lifetime high levels, no sign of correction. We have not seen any weakness also. till the time stock does not show any weakness or correction, it's better to be on long side. For creating a fresh long at these levels, one need to maintain a stop loss of 1170, and existing positions, those who have taken positions at lower levels, they can hold on their positions with a trailing SL of 1170. Closing above 1210 can take stock to 1250 levels. A closing above 1210 can take stock to 1250 levels or 1280 levels also. Still the trend is strong, stock is looking good on charts. One should remain on long, one should hold on their positions for the upside target of 1250 1280 levels.
Right. Sumit, how would you look at Z? Numbers come out today post market hours. Every time after the numbers, it tends to make a new high.
Can you please repeat the stock?
Z Entertainment.
Yes, yes. Absolutely, yes. Z Entertainment. See, overall, the stock has given a very good upside move from lower levels, and we have seen a sharp upside rally in the counter from the levels of 400. I think yes, the stock is looking good. Immediately today also, if we see, stock has given breakout and it has closed near lifetime high levels. I think above 475 we can see levels of 500 also. I think till that time stock is not able to break the levels of 450 or 455 on lower side. Stock is strong. Any dip in prices till 460 level should be used as buying opportunity. 450 or 55 should be the stop loss for long positions, and a breakout above 475 will take stock to 500 levels in next couple of weeks.
Right. Shaina, Z, do you expect it to be, a good number?
I personally hold Z Entertainment, and I expect it to be a decent number, a growth in advertising of about 17-18%, because it could have been higher, but for the base being high because of their AND TV now being there in the comparative base. It was there in June also, so to that extent, but I think their margins will be better because the losses on some of the new launches, new channels are coming down. So to that extent, I think it will be an interesting number from Z, and subscriptions continue to increase. So I think they are a strong player, and I would continue to be a investor in this stock for the medium to longer term.
Right, 18% growth rate will actually be a very good number, right, considering the base?
Yeah, I would think so. I mean, we are used to seeing talking something like 20-25%. So 18% on that comparative basis, what we've been seeing in the last couple quarters, it's slightly lower, but then now the base is also higher. So
right.
To that extent.
Shaina, how would you look at Hindustan Zinc? Decent set of numbers, 203 after the results has done very well.
Yeah, Hindustan Zinc is in terms of value pick, because they're I think they are doing well, and commodity prices, zinc prices are stabilizing. So to that extent, there is another 15-20% upside from here on also, despite the performance in the stock. So I think Hindustan Zinc does look like an interesting mid-cap bet.
Right. How would you look at Hindustan Zinc, Sumit?
Pankaj, metal stocks are looking good to me. If you remember, we have been bullish in most of the base metals we have been bullish on most of the base metals, and in last 1 or 2 months we have given buy call in most of the base metals. At present also, I feel that base metals will outperform, and in next few months we will see a very good upside rally in base metals. As far as Hindustan Zinc is concerned, I think it has immediate resistance at around 210 levels. Breakout about 210 is required for a further upside rally. As soon as a breakout about 210 is seen, we can see a rally of around 15-20% in next 3 to 6 months time horizon. Overall, I am expecting Hindustan Zinc to touch levels of around 240 or 250 soon. I think if there is a small correction in the prices till 195 or 190 levels, then that should be used as a buying opportunity. And for a positional trade, one should maintain stop loss of around 180 on lower side for the targets of 240 and 250 levels.
Right. How would you look at Vedanta and Kane on that note as well?
Vedanta is looking good to me. I think Vedanta has already given a move of 80 rupees from lower levels. I think from present levels of 169, 170, we will see a move till 200 soon. So as far as Vedanta is concerned, if there is a dip in the prices till 160, then that would be 160 or probably 165, then that would be a very good buying opportunity, because on downside I feel till that time 145 or 140 is not taken away. Any dip in Vedanta should be used as buying opportunity. A close above 170 or 175 will take stock to 190 or 200 level soon.
Right. Shaina, how would you look at Vedanta and Kane merger?
Actually, I mean, Vedanta is definitely a beneficiary in the overall merger between Vedanta and Kane. So, if I was to buy between the two, I would prefer Vedanta. But at the same time, I would just avoid either of the two. I think let the merger take place. Let's see what's happening. There's going to be a lot of negative sentiment in terms of how the money is being utilized, of how Vedanta uses the money of Kane. So, to that extent, and I think if you look at in pure fundamental valuations, if you take at current valuations, I think they are fully valued for the next 1 odd year. So I think they will consolidate in this range.
So there's no hurry basically?
No, absolutely not. I wouldn't buy either of the two. If I want to be in metals, I would prefer Hindalco. I would be a buyer in Hindalco. I think it's a much cleaner play, and aluminum is doing much better, is doing well. In fact, going forward 2 years, 3 years, and Hindalco has a lot of capacity that they've added. So that should come into play in terms of better earnings. So I would prefer Hindalco in the overall metal play.
Right. How would you look at Kane Vedanta? Like, Kane is trading at about 3 times EV to EBITDA, Vedanta at about 6 times. So once the merger happens, itself will become about 4 times. Do you think that itself will correct to 6 times? That's a play over there?
Well, it's possible. It will depend on crude oil prices. It will depend on overall metal prices. It's also likely that it will remain at 4 times. So, to that extent, I think in my view it will remain at 4 times. I don't see the overall PE expansion immediately because there are so many negative factors that will keep the stock. I would see the overall valuations in check. I think if crude oil prices remain low, I think the valuations of these stocks also are going to find it difficult to expand.
Right. Sumeet, Hindalco, Shaina just mentioned about Hindalco. Any view on that? Could you just give us the levels?
As I already said that most of the base metal stocks or metal or steel stocks are looking good to me. As far as Hindalco is concerned, sorry, we are expecting a good upside move in Hindalco also. I think from present levels of 130, 131, we can see a move till 145 or 150 levels. I think because of volatility, there can be some correction in prices from present levels. If the correction comes, we can see levels of around 125 or probably 123 also. But these dips in Hindalco should be used as buying opportunity for the target of 145 or 150 also.
Right. I think Z is just declaring numbers. If I look at Z in terms of numbers, so the total income has come in at ad revenues are up 19.2%. Shaina, ad revenues up 19.2% on a solid base. That should be a positive?
Yeah, it's a positive. It's much better than expectations. So I think that would be a positive number.
Right. But I'm just looking at the consolidated, PAT number as well. So that's coming at 218. And we were expecting, slightly higher, close to about 280 odd crores. Could you just tell us that what could have that been before? There was a big margin expansion that was expected, but you think that may have not come in?
Yeah, possibly. I think one will really have to see the margin expansion, margin decline, I would say. Maybe there's some impact on margins, and we really have to see the reasons for the same. And also another thing, probably we need to check up the subscribers and that impact on margins, how that has moved and the overall margins. Because ad revenue growth has been pretty good. So there has to be something else that has impacted the overall profitability.
Right. If I look at the I'm just opening the release. I think in the next 5 seconds we should have the release. But ad growth coming at 19% and then margins coming down, it could be a one-off as well because ad growth is the main driver.
Absolutely. Really, we'll have to see. We'll have to see what has impacted the margins.
Right. We are getting the other income number which is coming in. So other income has come in at 73 odd crores. I'm not sure what is the sort of run rate that this company does, but that's about 73 crores. So that seems to be a big number. As far as the details are concerned, so advertising growth is up about 19%. Subscription is up 14%. Shaina, that was expected to be 13-14, right?
Yeah,
it's not as strong as the ad revenue growth.
No.
Right. So the EBITDA has come in at 453 crores with a margin of 28%. So Shaina, margins of 28% are also quite good.
Yeah, it's in line.
EBITDA margins are broadly in line. So if I just go down on the release, try and find the table and try and look what really impacted the numbers. Yeah. So I have the table. So it's about 453 crores in terms of operating EBITDA. Depreciation is higher. There is a finance cost which has gone up by 50%. That's on a YOY basis. So it's about 25 crores. It used to be around 16 crores. Of course, that is a problem. and there is a very big item which says fair value through profit and loss. It's up 87%, 113 odd crores. Shaina, any clue what is this fair value through profit and loss?
Well, we would really have to see the details.
Right.
It could be something to do with the change in accounting policy,
or some write-off, or something,
yeah,
what they are trying to do. But generally when you have such sort of items, they tend to try and see that overall there should be some explanation for this. I'm just trying to find in the release, but apart from this number, there is no other major number that I can see. So definitely, okay, just Shaina, just summing up the numbers of Z, 453 crores at an EBITDA level. Say if this is a non-cash item, fair value through profit and loss, it's a decent number.
Yes, I would think so. I think it could be some bit of change in accounting, maybe because
so
of
basically
which,
it's a non-cash item.
Yeah, maybe. We really need to look through carefully, but I think overall the numbers that we're seeing in terms of growth are pretty reasonable. They're good, in line with the expectations.
Right. Shaina, thank you so much for taking out time for us. Hope to see you again quite soon.